Mississippi State Extension livestock economist Josh Maples is our market analyst this week. The last time we talked with Josh was in May, just after the U.S. announced it would resume shipping beef to China. Since then, the United States has exported more than $17 million of beef and beef products to China. Nebraska's shipments account for more than half that total. Data released this week shows American beef exports to all destinations in October were up 13% year over year. Market prices, meanwhile, have slipped noticeably over the last few weeks. With Wednesday's close, the December 2017 live cattle contract sunk to its lowest mark since early October. We started our conversation there when we talked with Josh Wednesday afternoon.
The last few weeks have been a pretty wild ride in the live cattle futures markets, mostly on the way down. So live cattle prices peaked around the first week of November, and since then we've given back quite a bit. So if we look at the nearby December contract, prices got up to around 126 back in early November, but they're back down around 115, 116 today. The February contract, similar story, got up above 130, falling back down to about 119 where we're trading right now. So we've given quite a bit back over the past few weeks.
What things are behind the slide?
Yeah, so I think there's a handful of factors behind this. The concern about lower beef demand after holiday purchasing is finished, is there, and it overhangs the market like it does every year. On the feeder side, I think finally getting some colder weather in certain parts of the country have pushed a few more cattle out onto the market. But really the $10 rally back in early November was a bit of a surprise. And the fact that prices have moderated back from this peak shouldn't be all that unexpected. I think the rally back in early November really led a lot of people to start considering how high prices could actually go, and I think we're seeing a little bit of reaction to that.
Do you think this decline changes the way that producers market?
I'm not sure about that. I think this decline is going to lead to producers maybe being a little more cautious. So if we start thinking about feedlots especially, you look at some of the break-evens for placements right now, those break-evens are not near as profitable as they were not too long ago. And so I think that's going to lead feedlots especially to perhaps consider keeping the cattle they have a little bit longer, when we could see dress weights go up a little bit. But I do think it's going to lead producers to have a little more caution.
The last time we talked, the U.S. just announced it would start exporting beef to China again, and at that time you said in the short term we need to sort of temper our expectations. We're a few months in now. How do you think it's gone so far?
Yeah, so I think it's gone about like we expected. So last report that came out, we sent about 1.5 million pounds of beef to mainland China. That showed up on the October report. This was down a little bit from September. September we sent almost 2 million pounds of beef. But in the grand scheme of things, that's still not that much beef compared to a lot of other countries. And so I think it's going about like we expected. This is going to be a gradual process. Markets have to develop both for U.S. beef in China, consumers actually purchasing it, but they also have to develop for the cattle here that meet the requirements for beef to be exported to China. So that's going to be a gradual process, getting both of those markets to evolve into what's required to see a lot more beef shipped to China.
Well, what do you think the price forecast is here as we close out the year and start heading into 2018?
Yeah, so overall for 2018, I still think we're going to see lower prices, slightly lower. I'm not calling for any kind of crash or anything like that, but we're in a situation where we know that we've got a lot more supplies coming, and we can see them coming through the system, and we see it on the horizon with larger calf crop again this year. So for prices to not go lower, we're going to have to see some increases in demand, and that's what's happened in 2017. We talk about exports, we talk about domestic demand being strong. Both of those things are really good, but if we look at what prices have done this year compared to last year, we're probably going to end up at an annual average at about the same rate. So even with the large increase in exports and even with strong domestic demand, prices this year are going to end up being about what they were in 2016. So if we look forward to 2018, and we know more supplies are coming yet, we're going to have to rely on some increased demand again. And so the question really comes down to, do we think we can continue to improve our exports, and can we continue to improve domestic demand at a pace that can keep up with these increased supplies?